Level 1. Overdraft and negative balance. Your account is below zero. Maybe by $4, maybe by $400. The amount barely matters because the system reacts the same way. An overdraft fee appears almost instantly, usually around $35. Some banks charge this fee for every transaction, so a few small purchases can suddenly turn into over $100 in fees. The logic is brutal. If you had money, you wouldn't be overdrawn. But because you don't have money, the system takes even more from you. Your debit card gets declined at a gas station. You try again. Still declined. People are waiting behind you while you quickly do mental math, trying to figure out if you transferred enough money yesterday. That's what financial stress really feels like. Not dramatic or cinematic, just standing there while your card keeps failing. The bank offers overdraft protection. In reality, this means they cover the payment and charge you $35 for it. Basically, you pay a fee to avoid embarrassment. Banks make billions every year from overdraft fees, mostly from people who are already struggling financially. The same people pay these fees again and again because the system is designed that way. At this level, you can't easily get loans or credit cards. You don't get patience or understanding either. Everything is automated. The system doesn't know your paycheck was late or that you forgot to cancel a subscription. It only sees one thing. Your balance is negative. You're not really a customer here. You're treated more like a problem the bank wants to recover money from. Level 2. Low balance. You finally bring the account back above zero. Maybe you have $200, sometimes $500 before rent takes most of it again. Now you avoid overdraft fees, but monthly account fees appear instead, usually $10 to $15 because your balance is below the required minimum. If you had enough savings sitting untouched, the fee would disappear. But since you don't, you pay simply for having a bank account. Your savings account earns almost no interest, while the bank uses your money to make far more from loans and credit cards. If you apply for a credit card, you might only qualify for a secured card. That means you give the bank your own money as collateral so they can lend it back to you. The service isn't rude. It's just impersonal. The app works, the teller is polite, customer service reads from a script. There's no relationship, only transactions. At this level, you're just another small account in a giant system. Level 3. Stable income. Things begin to change. Your paycheck arrives consistently now. Maybe $3,000 or more every month. The bank notices automatically because your account activity looks more stable. Suddenly, real credit card offers appear. Your limits are higher. You can apply for a small loan and actually get approved. The interest rates are still high, but now the process works. You ask for something, and the bank says yes. Monthly account fees may disappear because your direct deposit qualifies you for waivers. That alone feels like progress because you finally stop paying simply to hold your own money. At this point, the bank sees you as useful. You're generating profit through card spending, loan payments, and steady deposits. You matter now, at least financially. Level 4. Growing savings. You've built savings slowly and consistently. Maybe $20,000 in savings and more invested. Now your financial profile looks very different to the bank. Credit limits increase automatically. Loan rates improve. Borrowing becomes cheaper because the bank sees you as low risk. This is where the system quietly starts helping you instead of hurting you. Better rates mean lower payments. Lower payments mean you keep more money. Keeping more money helps wealth grow faster. You're no longer invisible to the bank. If you threaten to leave, someone may actually try to keep your business. That's the beginning of leverage. Level 5. High savings and assets. Now you have serious savings, maybe over $150,000 between accounts and investments. Customer service changes noticeably. There are shorter wait times, better support, and people with real authority to fix problems quickly. Sometimes you even get a dedicated banker, a real person who knows your name and contacts you directly. The bank begins offering premium credit cards, investment products, and mortgage deals because they want your long-term business. You are now considered a valuable client. Level 6. High net worth. Usually this starts somewhere between $500,000 and $1 million in assets. At this level, banking becomes personal. Wealth management services appear. Investment advice, tax planning, estate planning. Loan approvals become faster. Rates get better. Problems are solved immediately instead of being escalated through endless departments. You stop feeling like a normal customer. The bank treats you like an important asset worth protecting. The difference between this and level 2 doesn't just feel like better service. It feels like a completely different system. Level 7. Very high net worth. Above $5 million, banks start offering things that regular people never even see advertised. You get lower mortgage rates, exclusive investments, and private financial teams that handle taxes, investments, and estate structures together. The rules become more flexible. Waiting periods shorten. Exceptions are easier to approve. The bank competes aggressively to keep you because your business is extremely profitable. Level 8. Ultra wealthy. This is private banking. You don't just have a banker. You have a private banker whose entire job is managing relationships like yours. They know your family, your goals, and your long-term plans. At this level, products become customized. Loan rates are negotiated privately. Large transactions happen quickly because employees know exactly whose account they are dealing with. The system that was cold and automatic at level 1 becomes personal and highly responsive. The rules don't disappear, but they become flexible. Fees are waived without asking. Problems get solved immediately. At this level, you are no longer just a client.